Mr. Nutman's the chief market strategist at Agora Financial. You got a new trade for us today, Alan, but first take a victory lap. I'll give you the all clear for the stage here, as you got long Apple last time we talked and another buy the dip that worked.
Yeah, again, it was about not trying to be the smart guy, but not trying to be silly. And the fact that it was about risk reward. We had Apple, it was at the time, a couple weeks ago, 10% off its highs. And that's a stock that came back to its 125 breakout after trading between 105 and 125 for many months. So that targeted 145 on the upside. So again, it's about the strategy as much as the stock. So we went with the in-the-money option, the 120 call, and you can see that's more than doubled in value. Now, we sold too soon, got out of half the position at 50% as we do, and we got out of the second half at 100%. So Apple could still go higher from here, but again, it was all about risk reward, and I felt very comfortable jumping into Apple at a super discount.
Okay, and we were just looking at the trade that you gave then as a refresh, just to be clear for those looking at
right.
That's not the trade right now. Obviously, the strikes are very different. We're at 145. That's a new record. So, Alan, I mean, as you pointed out, you got out of the position. Now that we're at highs, this is
right.
not exactly the one that kind of fits your overall approach, which is to look for companies that are not at highs while the overall market and their index is at a high, right?
Right, exactly. So, chasing Apple here, it could still go a lot higher, but that was my initial target, was 145. And again, using the power of options, those options doubled in value. That's 100%. 100% in 2 weeks. It was 2 Mondays ago that we put on that play. So if it goes higher and I miss out, I can't be that upset. That's a fantastic return.
Okay. Hey, Alan, what about Twitter? That's your trade today. And Twitter is a laggard, and it's been one since it booted the president off, the ex-president, and the market apparently was not a big fan. So it's got this Twitter-specific news is my point. But the overall market, of course, is surging. So do you take the same approach?
Right. Same approach. If you look at this, this is a price, not politics play. Twitter has been trading between 35 and 55 for 5 months. So that midpoint support is 45. We've come back down to that support level, and we're 10% off the highs. So again, from a value standpoint, I'd rather be buying a stock at a discount, leaning on a support level, using an options, a limited risk options play, than chasing something that's already had a big move. Now, Twitter itself is still nearly 150% off its March low. So this is a momentum stock. It's just pulled back. So the play I'm looking at here is the March 43 call, again below that 45 midpoint support level, and that option's trading about 8 or so right now. Now the March option's only $75 more expensive than the February option, so buy more time. Even though I'm expecting something to happen in the next few weeks or next month, it has that staying power to ride through some ups and downs. And there's a big gap at 50 that could be filled, and we've seen that happen many times before.
Okay. All right, so you're looking for this to basically find the support. We could draw pretty much a diagonal line right along the lows for Twitter. So you like the entry point, similar approach.
Right.
It maybe not as
risk reward.
Not quite a sure thing as Apple's been in the past, but the trend doesn't lie the last year for Twitter.
Right. Nothing's a sure thing. It's about buying at solid support levels, seeing how the stocks react, having a limited risk option, and it's an in-the-money option stock substitution strategy. So I'm tying up so much less money than buying the shares of stock, and I have limited risk. Again, it's like being long from 43, and so it's deep in the money, and we can take advantage of the market move if and when something positive happens for Twitter. Then it could fill that gap at 50 and then chase those highs one more time.
Okay. Alan, appreciate it. What about the overall market? You trading the NASDAQ at the highs too? You buying Qs?
Well, there's still upside potential. If you look at the NASDAQ, we talked about that sideways range, and it targets 14,500 in the NDX. So we still have more upside. Again, it's a matter of getting into some stocks maybe that haven't been the leaders, and see if they can participate. So find some tech shares that maybe haven't participated. But I'm still very, very positive of the markets. Optimism wins, and that's what's been successful for the last weeks, months, and years.
Okay, appreciate it. Alan Uckman with the trade. Nice trade on
Thank
Apple.
You.
Another example on Twitter today. Chief market strategist at Agora Financial. still waxing optimistic about the market.